All right, today we're going to zoom way, way out. We are not talking about next week's price charts. We are talking about the next decade's financial revolution. This is about a 30-year plan, and it's built specifically for the generation that's going to live through this whole transformation, millennials.
Okay, that's a pretty provocative way to kick things off, right? But what does it actually mean? It doesn't mean your local bank branch is just going to disappear. It means the very idea of banking, how we save, how we borrow, how we invest. It's all about to be rebuilt from the ground up on brand new digital rails.
And this slide, I think, just lays it all out perfectly. Look at the left. That's today. Checking account, savings, brokerage. You know the drill. Now look at 2035. Your checking account, it's a multi-chain wallet that does everything your bank does, but better, faster, and globally. Your savings account is now earning yield from stablecoins. Your brokerage, that's just a DeFi protocol now, an open, automated financial market. And even something like your mortgage becomes a piece of tokenized debt. The entire financial stack is getting a massive upgrade.
So, you might be asking, how does all this happen without total chaos? Well, it all starts with this first really big idea. Crypto is about to go from this loud, speculative thing everyone argues about into something quiet, essential, and basically invisible. And this is the perfect way to think about it. Right now, when you send an email, you don't think about the protocol, the TCP/IP that's making it work. You just hit send. That's the real end game for crypto. It becomes the invisible layer that just powers this new internet of value. You know, the biggest sign of success will be when nobody even talks about crypto anymore because it's just there. It just works.
Okay, so if this stuff is going to be invisible, how in the world do you get billions of people to actually use it? The answer is through these huge, really cleverly designed on-ramps that, honestly, most people won't even realize they're using.
And you know what? The path is actually getting clearer. In just the next few years, we're going to hit some critical milestones. In 2026, the US finally gives some regulatory clarity, and that just opens the floodgates for big money. By 2027, Ethereum scaling is fully mature, making everything way faster and cheaper. By 2028, gaming economies start to connect in a real, seamless way. And then, by 2030, you've got dozens of countries with their own digital currencies, which makes digital money normal for literally billions of people.
Let's just double-click on that regulation piece for a second, because it is the key that unlocks everything. We are talking about an estimated $10 trillion in institutional cash that's just sitting on the sidelines waiting for a green light. We're talking about crypto options in your 401k. We're talking about giants like Amazon and Apple finally being able to bake this stuff into their services. Regulation is the bridge.
Now, CBDCs are really interesting. These are government-run digital dollars or euros. And here's the paradox. They might actually be one of the biggest drivers for decentralized crypto. How? Well, they get billions of people totally comfortable with using digital money on their phones. And once they're used to that, a whole lot of them are going to start looking for better options. Options with more freedom, more privacy, and more potential.
And the other huge, stealthy on-ramp? Gaming. And this one is massive. Forget all that complicated play-to-earn stuff from a few years ago. The real revolution is so much simpler but way more powerful. It's true ownership. Just imagine you buy a rare sword in one game, and you can actually take it with you into a completely different game. Or you can sell it on an open marketplace for real money. That idea, that simple concept of ownership, is going to bring hundreds of millions of people in without ever having to explain what a blockchain is.
And that brings us to what might just be the single biggest opportunity in this entire space, taking pretty much everything of value in the real world and putting it on-chain.
$100 trillion. Just let that number sink in. This isn't about creating some new internet money. This is about upgrading the financial plumbing for every existing asset we have. Stocks, bonds, real estate, art, the whole shebang.
And to really put that in perspective, just look at this chart. The entire crypto market today, it's that tiny little sliver on the left. It's completely dwarfed by the global stock market, and even that is dwarfed by global real estate. If we tokenize even a tiny fraction of these markets, it fundamentally changes the entire game.
So what does this actually mean for you, personally? Well, it means your mortgage could one day be an NFT, a unique, verifiable token representing your ownership. Your 401k could be a collection of tokens that give you fractional ownership in things like apartment buildings or private companies, assets you could never easily access before. It's about making all ownership verifiable and, crucially, liquid.
All right, let's shift gears now to what could be the most powerful combination of technologies we've ever seen.
This is where the two biggest trends of our era, artificial intelligence and crypto, inevitably collide.
And you might be thinking, okay, why? Why would these two huge technologies even need each other? Well, it turns out that as AI gets smarter and more autonomous, it starts running into some really big problems that, funny enough, blockchain is uniquely built to solve. It really boils down to three critical things. First, proving what's real. In a world totally flooded with AI content, blockchain provides an unchangeable record of where something came from. Second, payments. How does one AI pay another AI for a tiny piece of data? Crypto makes those autonomous micropayments possible. And third, and this might be the most important one, decentralizing power. It helps make sure that super intelligent AI isn't just controlled by one or two giant tech companies.
So all of this tech stuff is happening, but it's happening right alongside this massive economic shift. And if you're a millennial, you really need to pay close attention to this part because it's the human element in all of this. $68 trillion. That is the insane amount of wealth that's projected to move from the baby boomer generation down to their kids and grandkids over the next 2 decades. We're talking about one of the largest transfers of wealth in all of human history.
Now, just think about what happens when that wealth changes hands and lands with a generation that grew up online. Studies suggest that inheritors are way more likely to invest in crypto. So, if just 5 or 10% of that $68 trillion makes its way into digital assets, you're looking at an influx of 3 to 7 trillion new dollars pouring into the space. That is a market-moving event. And that really leads to this key piece of advice. This demographic shift isn't a maybe, it's a when. It's like this slow-moving but absolutely unstoppable tsunami. And the smartest thing you can do is understand where the high ground is long before the wave actually hits the shore. So, let's put it all together. How could you even begin to think about positioning yourself for this future? Now, obviously, this isn't financial advice, but these are a few frameworks, just a way to structure your thinking based on all these trends we just talked about.
You know, a more conservative approach might anchor itself in Bitcoin and Ethereum, the blue chips, with a slice in real-world assets for some stability. A more aggressive strategy might lean into the higher growth areas we talked about, like gaming and AI. And a more hedged portfolio might hold a big chunk in stablecoins and other tokenized assets just to lower the volatility. The key isn't the exact percentages, it's aligning your thinking with these long-term trends.
And that right there is the ultimate takeaway. The whole conversation is shifting. This is becoming less about trying to pick the next hot cryptocurrency and much more about understanding who is building the actual infrastructure, the new digital plumbing for finance, for AI, for gaming, for everything. It's about owning a piece of the new system itself.